we do pay a lot of tax, okay? I think people like to compare America to like the European countries. We don't pay that much less if you consider property tax, income tax, all city tax, state tax. We do pay a lot in America, okay? And once you start earning more, I think it's some large percentage of people in America at some point will be in the top 10 of taxpayers. So you guys likely at some point in your life will be in that top tier of taxpayers. And you're gonna have to pay, you're gonna be crying more than him because he only made 280 bucks. But when you add several zeros to that, you're gonna see that the percentage that leaves your like if you sell a house or you sell stock, right? If you have a big capital gains, you're gonna end up paying a lot. We as citizens have to figure out, is it like being used in good ways that we think are, appropriate, and is it being wasted? You could argue that maybe there's a lot of waste. Um, but yeah, I think you guys, it's like it's easy to like uh criticize, uh, like or like demonize people that are high earners, but I think most of you guys will be there, you will. I think the median income in America is like 80,000 household income. And if you guys stay in California, you will certainly be in the high, like that's household, okay? So I'm sure a lot of you, like if you get a big four accounting job, your starting salary will be more than that. Okay. So you guys are on track to become high earners, and therefore you'll see a large portion of your check leave. I remember when I got my first job, I was living in New York City, like my first real paycheck, and close to 50% was gone because you pay, New York has, I think, the second highest state tax, and there's a city tax if you live in New York City. So it's like, it hurts that for half the year you were working for the government. Okay, you can think about it like that, and that's quite a lot. But in any case, we should know all the different parts of payroll, um, because there are quite a few components. And if you're the employer, you're going to have to deal with the payroll tax, because your employees, you're going to have to kind of do some stuff on their behalf. And then you will also have your own obligations as an employer. Okay. So um, payroll, okay, is going to include all forms of compensation. So this includes salary and wages, commissions, bonus, and benefits. Okay, this is all stuff that is included in an employee's compensation. Um, some of this stuff is not subject to like the calculation of the payroll tax, but some of it is. Most of it is. Um, but all this is considered compensation. It's value that the employee is getting. Okay, so when you have healthcare as part of your payment package, there's a dollar amount like value to that. Okay, so that's actually part of your compensation. There's a concept, and this kid saw it: gross versus net. Okay, so you as an employee, though you've earned a certain amount, you're not going to have all of that in your paycheck. Your take home pay is going to be less than your gross pay. And what all the stuff is that they take out is stuff that you owe, okay? Because you owe certain things to the government, um, to maybe contribute somewhat to your healthcare. These are things that basically the employees, like the employer is like, here's all your amount, plus I'm going to take or minus stuff I'm going to withhold on your behalf. Okay, so it is your money technically, but the employer is going to pay it off to all the people you owe money to. Okay, so um, again, this is a key concept that your take home pay and your gross pay, the difference is things that you owe as the employee. Okay. And again, it's things like income tax, right? So the government does not trust you to just pay a lump sum at the end of the year when you file your taxes for the income tax you owe. They're going to take out some estimate of it every paycheck. Okay, so that's income tax withholdings, Social Security. So you are required as a salaried employee to contribute to Social Security. It's a separate kind of account, and out of every paycheck, you contribute and your employer contributes. It's like a matching. Uh, it's kind of like a 401k, you can say, in that you're contributing some and your employee's matching. Okay, but the government is kind of managing it, right? You're paying all this to the Social Security Administration. Then you're going to have maybe some portion. I think, like for my healthcare for this job, I pay like maybe 5% or 10% of the total premium for healthcare, and that my employer pays the rest of it. Okay, but I do contribute some to my uh, healthcare premium, and then whatever is left over is how much you actually get in your paycheck. Okay, and there's we'll see some other miscellaneous stuff. Okay, so the benefits that an employer is paying, like this is all you can consider. All this stuff is an expense to the employer. Okay, they're paying you, of course, your take-home pay, but they're also kind of paying that income tax, right? They're giving you this large amount of which you owe some, but that's all an expense to the employer, right? It's like the employer, this is the employer, this is your boss, this is employee. It's like the employer is giving you $1,000. So all this is an expense for them, right? Your gross pay. But then they're saying, okay, well, on your behalf, I'm going to hold back $200 because you owe that much to the government or whatever. Okay. So all this thousand is still an expense to the employer. This 200 is a liability. They're going to have to pay all these other parties on your behalf. Okay. So I think the key thing to remember is that the gross pay, all of it is an expense to the employer. Okay. Though they're only paying you a certain amount of cash, the rest of it is going to be distributed to the IRS, to the Social Security Administration, to Kaiser, to all the other parties that you, as the employee, owe money to. Okay, but all of this is still an expense for the employer. They're funding all of that. Okay, so yes, just to be clear, payroll is related to salary and wage expense for the employer. So all of this is salary and wage expense. On top of this, the employer also has their own additional payroll tax expenses. Okay, so uh, a lot of the accounts are going to be overlapping. Okay, we're going to see like Social Security. You're going to see it come up twice. Once in salary and wage expense because the employee owes some of this. You're also going to see it come up in payroll tax expense because the employer also is contributing to Social Security. Okay, so I think this is the key conceptual thing. I think maybe people are missing that salary and wage expense is what you're paying to your employees, of which you're holding back some of it because the employees owe money. On top of that, you as the employer owe a separate payroll tax. Okay, it's on top of the salary and wage expenses. It's an additional expense. Okay, so we're gonna see how this all works, but I think I'm just trying to emphasize this now, and like I'll restate it that there's two different expenses going on in payroll. There's what you're paying to your employees, and then there's an additional payroll tax that the employer has to pay on top of all this. Okay, so um, employee's paycheck, where is it all going? Okay, the employee does not receive all their compensation. The employee has the employee has required obligations. Okay, and they also have things that they choose to do, and depending on that, there will be withdrawals from their paycheck. Okay, so what are the required ones? You're required to withhold state and federal income tax. So again, the government does not trust that you're going to save appropriately during the year to be able to pay a large amount at the end of the year when you file your taxes. So they kind of take money out of your paycheck every period And if you end up having overpaid, they'll give you a tax refund. Okay, so this idea that you're happy to get a tax refund, it's kind of irrational because that just means you gave the government an interest-free loan. Through the year, you just withheld extra money, and then at the end of the year, when you file your taxes and you actually calculate how much money you owe, it's you basically they basically withheld too much, and they're just giving you your own money back. Okay, so there's nothing really exciting about a tax refund. It just means you overpaid the government during the year. Okay, it could also mean there's some tax credits that are refundable. So it could be that too. In that case, it is kind of free money. Um, but a lot of times it's just, you're getting your own money back. You are also required to contribute to Social Security and Medicare. This is known as FICA. Okay, so we'll talk about how this is calculated. And then there's miscellaneous stuff, city income tax. Some jobs require a pension contribution, like I'm required to contribute to a pension. It's just an automatic thing that is deducted from my paycheck. Um, if you are a high earner, there's extra Medicare sometimes. So if you're like a very high income earner, um, so there is just some miscellaneous required stuff. Okay, so this is all required. There's also stuff you opt into. So you can choose insurance. Some people who are like a married couple where both people have a job that offers insurance, you can opt out of it. And sometimes the employer will give you like an extra amount in your salary. Um, but this is kind of an optional thing. Okay, most people opt in if you're like, if you're not getting covered some other way. Okay. Um, and so oftentimes the employer will pay the majority of the health premium. Like I have Kaiser, right, through this job. Kaiser charges, I think it's like $1,200 a month or something. Okay. I think I pay like 100, and the employer, the Contra Costa Community College District pays 1,100. So that is $1,100 of compensation that I'm technically getting, right? Because if I were just to pay this out of pocket, I'd have to pay 1,200, but I'm only paying 100. So the rest of that is like extra compensation, right? It's just going towards a specific use, which is my health insurance premium. 401k, retirement, this is actually optional. You do not have to contribute out of your paycheck to a 401k. You are opting to do that. Why do people opt to do that? Because oftentimes it's like if you contribute $1,000, your employer will contribute a matching 1,000. Okay, so it's free money. Any amount that you contribute out of your paycheck, you're going to get that amount matched by your employer up to a certain amount. So people will contribute to their 401k because it's free money coming from your employer if you do it, but it's optional in the end. And then, charitable giving, parking, if you have like, if your employer charges you parking, all that miscellaneous stuff that you opt into, you can also have come out of your paycheck.